Ladies and gentlemen, Investor Talk is back with a mining CEO video. And today I welcome there in Down Under Australia, Ron Heeks, the managing director of Larvotto Resources. And I bet most of you have never heard of this company. We are talking today about gold and antimony. And believe it or not, this is a company that's going to have negative all-in sustaining costs on the gold production. Mr. Heeks, a pleasure to welcome you here.
Thank you. Pleasure to be here, and great to talk to your visitors.
Before we begin, I'd like to start with a chart of Larvotto, your company, because this is very telling. Your company is not only relatively young, but last year suddenly something happened and the stock took off. What was the reason? We will find out shortly. Here we see the price of your stock at the Australian exchange, and clearly we see last year in August something happened. But before we come to this, please tell my audience a bit about your own background, your experience in the mining business.
Yeah, certainly. I've been in the mining game my entire life. It's about 42 working years now. I've worked in 10 countries, operated or built mines in six, and that covers gold, copper, coal, and including Indonesia, Africa, and Australia. Papua New Guinea. So worked all around the world. I'm a geologist down deep, but I've always been involved in development and commencing operations of projects, which is my true love. So this project came along at just the right time for the company, and it fits right into the sweet spot of the skills of the board.
Sounds very good. And the topic today is antimony. And let's see what happened there last year that caused this increase in the stock price. Reuters here reports antimony prices gear up for new records on China export curbs. And that's the point. China's decision to restrict exports of antimony from September 15th is likely to drive the prices of the metal used in ammunition and batteries to new records, etc. And there is another speciality with antimony. We see here the production of antimony 2023, but that will not have changed a lot. And what do we see? China, of course, Tajikistan. This is a real strategic element that comes from countries the West is now more or less in difficulties or has problematic relationships right now. You say, Larvotto, you have the largest antimony deposit in Australia, and that's caused the stock to jump out of the sudden. But the price of antimony is a bit difficult to get in the internet. There are many different prices out there, Chinese prices, Rotterdam prices. It gave me really a hard time to find
Yes.
a good price. Let me go back to this older Reuters article because there was a price chart. Here we see the price of antimony. It stands here at $22,000, but after that happened the following. You see here. So which price are you using for your calculation? I think the price that I just showed, right?
No, antimony is our off-takers are currently selling antimony for $62,000 a ton. It's gone up six times from when we acquired the project.
Hillgrove, that is your key project or your main project that you are currently getting to finance. And I read there that you got it less than 2 years ago for just 8 million Australian dollars at the end of 23. Was that a distressed asset? How could you make such a bargain, such a deal that is really, I cannot believe it. My goodness. And you even have infrastructure, a mill there sitting with a replacement value of 200 million. And this for just 8 million, it's simply too much for me, honestly.
Yes, you're correct. It was a distressed asset, and the company previous to us was putting the project into production, and they were doing that with funds from another one of their operating mines. That mine had a catastrophic underground failure, and they basically lost their cash flow overnight and became very distressed very quickly. So they were awfully close to getting the project working. They had the team on site that was there was about 70 people on site, building up to the sort of 200 people operating level when they got into financial difficulty. They did run the process plant and treat stockpiles and treated 100,000 tons of stockpiles, but that wasn't enough to save the company, and it went into administration. We purchased the company out of administration. It was a very long and arduous job to do that. Easily the hardest thing I've ever done. It went on for 9 months. But at the end of the day, we were the successful bidders. And at that point, most people didn't know what antimony was. I'd had an association with this project previously, some 10 years beforehand. We were very bullish on the antimony price. We could see that there was a world shortfall. We could see that the uses of it was increasing, particularly in solar panels. Its use in solar panels is really what's driving the demand heavily. And it was the right project at the right time for us. So we've said a few times that everybody else's bad luck here has actually been our good luck. And this was very much the case. So nobody wanted it. We didn't get a lot of love when we first purchased it. But then the antimony price started to move as we'd hoped. It moved a lot more than what we'd hoped. We thought it might double. We didn't think it would go up 6 times. But you are correct. We have a plant that operated in 2022. It's in very, very good condition. It has a replacement value arguably greater than 200 million. Plus, we have $150 million worth of underground infrastructure, 15 kilometres of declines and drives, and we have about 12 months ore supply that's developed and ready to mine. So we are in a very unique position to capitalize on the highest ever antimony price and the near highest ever gold price.
Interesting. I'd like to show to my audience your summary of your project from your website. It is really huge. 254 square kilometers. That is the resource, the historic resource of 1.7 million ounces of gold equivalent. A lot of that is antimony, of course. I think with such a big project, you also have a lot of exploration potential, don't you?
Oh, it's huge. Yes, very much so. The area has been mined for a long time. Gold has been mined at Hillgrove for over 100 years, and antimony was mined continuously for 30 years up until the year 2000. And so it's got quite a history, but the exploration potential is huge, and that is both deeper down, and we've demonstrated that with some of initial drilling where we had one hit of 31 metres at 64 grams per tonne, so 2 ounces. But we've also got potential of coming up from the underground workings higher and getting the antimony, because as you get closer to surface with most of these ore bodies around the world, you tend to get higher antimony grade. And antimony wasn't the focus of this operation, it was gold. So we can mine up, we can mine down, we can mine along strike, but we also have about 20 kilometres of parallel zones. So the exploration potential here is huge, and we don't think it will be too long before we're able to demonstrate, it's a very strong multi-million ounce project.
The viewers saw already the antimony price and how it increased. You just said it, it's over 60,000 US dollars per ton now. And I would honestly expect the tensions with China to persist for a longer period. So I expect the price for antimony to remain high for an extended time. And you intend to bring your project into production by the second quarter of 26, and you intend to deliver 7% of the global antimony supply. Let me show you a recent feasibility study. Here are the numbers that I promised to my audience, negative all-in sustaining costs, but please comment on those numbers and those three scenarios.
Yeah, sure. We ran it at a base case because we said we would use those numbers when we did the pre-feasibility study. Arguably very low, 2,400 gold and 25,000 antimony. We always run a spot so people have a feel of what it looks like right now, which is quite incredible numbers. But most of what we're talking about is a mid price. We still think that price is quite low. So 2,800 gold and 41,000 antimony is still 40% below where it's currently trading. But given that, an NPV of 700 million, an internal rate of return of 102%, and as you mentioned, that gives you a negative all-in sustaining cost on the 40,000 ounces of gold of $1,300. If you run that at spot, it's quite crazy. It's negative 3,000 dollars per ounce to mine the gold. So quite incredible numbers. We always talk a gold equivalent because we mine gold and antimony at the same time and we process them at the same time, and we actually use that number in our underground minings. But most people don't quite understand what the antimony means. So we talk about a gold equivalent so people can. Another equivalent, for example, our 1.5% antimony is equivalent to about 9% copper at the moment. So, if you say you've got a 2.5 gram gold ore body with 9% copper, people understand that that's pretty interesting.
Those are really mind-blowing numbers. And I
They
read
are.
somewhere that, yes, really, that you have to upgrade your mill that is already sitting there. You increase it to 525,000 tons or so. And I would even assume, but maybe you intend this, to increase the production of antimony and gold if exploration success warrants and if you can convert those resources into reserves. Is this planned?
Yeah, it certainly has the potential to do that. Um, from the area that we're mining at the moment, the mill size is about right. These tend to be narrow, higher grade underground ore bodies. There's only so fast a rate that you can mine them at because before you get yourself into trouble and become overly optimistic. But certainly, if we have the exploration hits that we expect to have, then the potential to uh, probably build a new plant, in actual fact, would be what we would be looking at. But certainly in the short term, for the first 5 years, we'll operate this plant. It produces a significant amount of cash, and we'd like to repay our shareholders early on. So we'll just keep it simple. We're trying to keep it as simple as we can all the way through with the processing and the mining, how we finance the project, and everything else. Um, and get some points on the board, demonstrate that everything we're saying is real, and then we can look at expansion from that point.
Before you start producing, you have to extend the plant, refurbish the plant, procure equipment, etc., to get a mine going. And I read the number of 130 million Australian dollar as your costs for this, which is not much for me. If we saw the EBITDA that you expect, how far are you with the financing? And I would expect that you want to avoid any shareholder dilution. So is this more or less with a loan?
Extremely well advanced financing. We have 7 term sheets on the table now, and we're in the final stage of narrowing that down. It's been aggressively handled by various funds, and we have some of the leading mining funds and Nordic bond companies bidding for the work. So it's been again quite unique for us to be sought after to fund because we're in the critical mineral space. A lot of funds have specialist categories for critical minerals. There's not many projects around, so that helps us. We're in a tier one location. So we tick lots of boxes for people very, very quickly, and we're being aggressively pursued. So we look to be moving on funding in the very, very near term. What is controlling the startup is actually long lead time items being on site. So we're working back from that and to minimize that amount of time. We have already pre-ordered the long lead time items. We've spent $3 million locking in $19 million worth of long lead time items so that we can have them on site as fast as possible. We strictly don't need to do financing at this moment, but we're working through that to do it as soon as humanly.
You did also an offtake agreement for your antimony that was announced last year in December with Vogan Resources Limited. What are the conditions there? And as I read it, they also contributed a part to your financing, correct?
That's correct, yes. They contributed 4 million US for a prepayment. Wogan Resources is the largest antimony trader in the world, based in the UK, but with offices through Europe and Asia, with a significant office in Hong Kong. They pay us at mine gate, and the pricing is based on Rotterdam Fast Markets price, which, as we mentioned today, is about $62,000. So we get a payable number that's commercial in confidence, but it's related directly to that, and we sell mine gate. So it's quite a normal process for a mine selling a concentrate to have an off-taker. Um, in this case, it's a small specialized metal, so you're much better off using a specialized off-taker rather than one of the larger companies that don't understand it. And working with Wogan has been a very pleasant experience so far, and they have off-take for the first 7 years of mining. So that makes life easy for us. Literally, as the metal leaves the gate, we get paid. So pretty simple. We don't have to find people to sell it to. That's their problem. We will also have a gold offtake in a very similar way.
But there is more than just antimony and gold. I read a few days ago that you even have tungsten. You announced a tungsten resource. Can you capture the tungsten with your current facility? Do you have to upgrade this? And is this already figured into the numbers of the feasibility study?
No numbers in there at all. It's just a resource at this stage. It's really there to answer the question that a lot of people have been asking, do you have tungsten? And yes, we do. We have quite a substantial tungsten resource. We will be able to add to that. Traditionally, tungsten wasn't always assayed for in the drilling. So we know we have a lot of tungsten in areas, but we don't actually have the results for that area. So we've got a lot of back working to do on that. But this was really to show that we do have tungsten. There is a tungsten circuit in the plant. We haven't concentrated on tungsten at all. So we're just starting work on that now. Our in-house metallurgist is starting test work on that. We look forward to seeing some very interesting results. And tungsten at the moment is, I believe, about $50,000 a ton. So it is extremely highly valued. But we see that as a byproduct. But at the moment, there's no metallurgy to speak of associated with that, except the plant has a tungsten circuit in it, as I say, but we've got a lot more work to do.
Sounds good. Exploration is always important to keep a mine alive. We mentioned at the beginning you have 250 square kilometers, and you said already that you had one result with over 2 ounces over a very good core length. Can you tell a bit more about the exploration that is currently ongoing, or is your focus rather on getting the mine started because you have now 7 or 8 years of reserves, mine life? What is going on this front?
Oh, very much both. Bringing the mine in production is certainly foremost for the development team, but we now have a significant exploration team. We have 7 geologists on site working on this. We have the Perth office all geared up now. We have 4 diamond drill rigs on site, drilling 24 hours a day. That gives us a lot of information moving forward, and we would be looking to release results on average, probably every 2 months or so. They're deeper diamond holes. By the time we drill the hole, cut, assay, work out what it means, and get a release out, it's about 2 months between results. We've already released some very good results for that. And that drilling is focused on many things. It's deeper drilling to determine what's happening with the gold at depth. near surface drilling to highlight new zones that are probably higher grade in antimony, and infilling current resources. So there's everything from grassroots, if you like, exploration through to moving the current inferred into a measured and indicated category so that we can move it into reserve. Lots going on.
I mentioned at the beginning that we focus on Hillgrove today, but you have also other projects. If we go to your presentation, there are more dots at the Australian map. Let me show this briefly. Could you say a few words to the other projects and what you intend to do with them? Because you focus now on Hillgrove, obviously, would that be something for a spin-off, joint ventures? What's intended with your other projects?
Mount Isa was our lead project. That's a copper gold project. We have 1,000 square kilometres of ground just to the east of Mount Isa, and the Mount Isa mill, owned by Glencore, is very hungry for new feed. We like that project a lot. We think there's a huge amount of potential there. We haven't done much work there over the last 12 months because of gearing up Hillgrove, but our exploration teams will be going out there within the next few weeks. And in fact, I'll be going out with them initially. So we look forward to doing some more drilling there. It won't be anywhere near as aggressive as what it is at Hillgrove, but it is a huge potential area for the company, and too good to walk away from it. It really was our lead asset, and we look forward to producing some very good results from there. Our other project in Australia is Air, which is on the Nullarbor Highway, east of Norseman. It's one of the most interesting areas I've actually worked on. It's prospective for more things in a small area than I've ever seen. So we have about 600 square kilometres of ground around that area, and it has potential for nickel, gold, copper, platinum within dikes. But we've also identified one of Australia's highest grade rare earths projects in clays, and would started metallurgical testing on that to determine if we can extract that economically. That test work is producing some extremely interesting results. We don't talk about it much. There's not a huge amount of interest in rare earths at the moment, but that's a project that our metallurgist is working on in the sideline, and look forward to some interesting results coming out of that in the future. So it's always good to have a few irons in the fire at the side to keep the rest of the technical team busy, and there's always upside, and that's worked for us well in the past. So yeah, quite a bit going on at the moment.
And that would be a chance or a future opportunity for a spin-off, but that's future talk, who knows? We saw already at the slide that you have major shareholders. How do they support you? I read their Gage 1832 Asset Management. What stake do they have and how do they support your company?
Gauge is sitting at about 14%. They're a Beijing based fund, and they came in at a point that allowed us to purchase the project when nobody else was really interested in antimony, and what we were doing. Then Gage came in, and they were very supportive. And a wonderful shareholder, really, have been incredibly supportive. Haven't participated in our last few raises, so have moved back down the register a bit, sitting at just under 15% now, which is a perfect number, but a wonderful shareholder. 1832 bought most of their shares on market. We had a shareholding by Trafigura, one of the world's largest off-takers, and they were part of the administration deal. So they were the debt holders for Red River Resources, who had the project before us. We did a debt equity swap to them. They started selling out when they'd got their money back, and they were very happy to do that. I don't think they thought that was going to happen, but it did. And we still talk with them a lot. So yeah, they've been great. 1832, as I say, bought on market and then participated in our last raise. And they have a lot of exposure to antimony, particularly projects in the US. So they understand and they've been wonderful supporters of the company. Our top 40 shareholders, and we probably know 30 of those really well, but that's about 60 people. Sorry, the top 40 hold about 65% of the company.
Investors obviously like stocks with great potential, and I think in this interview we have shown to the audience that there is a huge potential. You even have a research report at your website that gives you a target price of 145. When I consider your current market cap at roughly 280 million Australian, your EBITDA of 251 with the middle scenario and 354 at the current prices, the spot prices, I see a lot more potential. Starting a mine is always a risk, although you have existing infrastructure, etc. Nevertheless, I think those risks are manageable in your case very well, and the stock offers really a huge potential. It's always a difficult question to ask a CEO, but that's my opinion. What's yours?
Yeah, look, I agree. We don't really have too many peers. We are the only company that will be able to bring on an antimony project of significance in the next 5 years. So you've got a massive shortfall. We will supply 7% of world antimony, and we are the only company on the planet that can do that. Uh, so that's quite unique. We were trading up around $1 a share when Trump released his world tariff situation. Um, Amazingly, we were specifically excluded from that. So antimony was specifically excluded, but we did get caught up in all of that. We released the DFS that showed those wonderful results. It's fair to say that for some reason that we don't understand, everybody seems to think we're going to raise everything we need via equity, and that's not the case. We will do a conventional debt equity facility. And I think, as you mentioned, we don't want to dilute shareholders, all of the staff, and the board are shareholders, so we don't necessarily want to do that. And with such a good repayment, it doesn't make any sense to do that. So we won't be diluting for any great reason. As we were talking, we have extreme potential from funding agents to do this. It is really quite unique how much interest. I've been involved with funding half a dozen projects. I've never seen anything like the excitement that people have in funding this project. So that's allowing us to do it more on our terms and at very good numbers. And as I say, we're working on that at the moment. It is an involved process, but it's progressing very, very well.
Which milestones, Ron, can we expect from your company this year? What news have we to look forward to?
Well, there's the ongoing exploration, and it's hard to say what that's going to be, but we've had some good results, so we expect more. We will be releasing that we have selected a funding partner in the very near term. We have already ordered the long lead time items. We will be starting work on the project in the near term. And yeah, I mean that's a fair bit just there, to be quite honest. So from here on in, it's finish the financing and start building and moving towards production. Start underground mining, build stockpiles, and if everything lines up, this time next year we will be producing an antimony concentrate, a gold concentrate, and gold bars.
Ron Heeks, Managing Director of Larvotto Resources, I thank you very much for this fascinating introducing interview at my channel here. I hope we can continue this in the near future, and I will have a very close look at your company. Thank you very much for today, and greetings to Down Under.
Thank you very much, and wonderful to talk. Thanks for the time.
My pleasure. Thank you. Bye bye.
Bye bye.